Welcome to the Capital Spreads Weekly Update. Today is Friday the 7th of May 2010. Well, it's been a very busy week both for economic as well as political news. You've had everything from the UK elections, which are currently showing a hung parliament, to downgrades of Portugal, Spain, Greece, as well as rioting Greece over the austerity measures that the government is proposing. Now, all this is feeding in very negatively into many of the markets across the world. As a result, you're having many of the equity markets having been sold off massively yesterday as well as over the last week or so. Yesterday was quite an extreme example. The current consensus seems to be the fact that we had massive program selling, which was computer programs triggering massive sell orders, which resulted in, at one point, the Dow index falling over 1,000 points and then bouncing back about 700. At the same time, you've had massive plays in the currency markets with huge sell-offs in both euro dollar as well as sterling dollar. Looking at the current situation so far, euro dollar is trading around 127.70. It sold off very aggressively yesterday, having bounced off a long-term support level around 125.20. The euro dollar has been in a strong downward trend for quite a while now, and that doesn't look like it's going to be changing anytime soon, considering the news that we're getting out of Europe. If it continues on its current path, you could certainly see it going at least down to about 123.00. However, if the Eurozone manages to provide it with a bit of support at the moment, we could possibly see a bounce back to around 130.00. Sterling dollar too has been selling off very aggressively recently for its own reasons. The principal reason for sterling dollar selling off at the moment is because there's a lot of uncertainty about what's going to actually happen with the UK elections. If we end up with a hung parliament, in that circumstance, there's a lot of uncertainty as to what the UK government will do about its huge budget deficit, which is certainly on par with that of Greece. And if that continues, you could certainly see sterling dollar continuing to sell off. It's currently trading around 146.70. It bounced off a long-term support level around 144.70 yesterday. Again, it's established a bit of a downtrend at the moment, and if it continues at this rate, you could certainly see it going possibly down back to around 140.00. The FTSE is currently trading on 52.41. Again, along with many of the other indices around the world, have sold off aggressively, which was principally triggered off by downgrades of a number of the European countries. But at the same time, you've had other uncertainties come in, which have questioned whether the recovery will continue, and many people are now starting to whisper whether we might possibly have a double dip recession. As a result of that, the FTSE, as I mentioned, is trading at 52.41. Again, it's in a downtrend. If it continues at this rate, you're possibly looking around support of around 51.50, and if it breaks through that, possibly even touching around 5,000 again. If it manages to find support anytime soon, you're possibly looking at a resistance of around 53.90. Looking at the commodities, oil and gold have finally started to diverge and go their own paths. Gold has been rallying recently. It's currently trading around 12.04. Now, in times of great uncertainty, this is quite traditional. What you tend to have is gold being bought as a safe haven, and this time around it seems to be no exception. It's in an uptrend which it established back in March, and it seems to be powering up ever since then. It could certainly look like it could go high as the all-time high of around 12.27 if it continues at its current rate, and given the fact that we have so much uncertainty at the moment. Oil, on the other hand, seems to be coming off quite aggressively. It's currently trading around 77.90. Now again, that's feeding off the fact that many people are questioning whether we might now go back into a double-dip recession, and the fact that demand as a result of that will certainly fall off. In terms of the week going forward, you're going to continue to have a lot of big figures which are going to move the markets around quite aggressively. One of the biggest coming out today will be the non-farm payroll. Now we're actually expecting quite a good non-farm payroll figure, an increase in jobs of about 170,000. However, if it comes in any less than that, and given the uncertainty we're having in the market at the moment, you can certainly see quite aggressive sell-off again like we had yesterday and over the last few days. You've also got the Bank of England rate decision coming out early next week. Now again, they're not actually expected to change rates anytime soon, but it's certainly worth keeping in mind considering how volatile the sterling dollar is trading at the moment. The client positions at the moment, many clients, as can be expected, have suffered losses over the last few days. We haven't had continued and sustained movements in the markets for quite a period of time, and we've had that over the last few days or so. As it currently stands, clients are buying into the fall we've had in the index markets, which is quite expected. So they're long many of the index markets, both in the UK, Europe, as well as the US. They also have sold into the gold rally we've had recently, believing that maybe we've hit a top and we could possibly reverse from here. And they continue to hold on to their short oil positions. In terms of a theme of the week, I would say the theme of the week is revolves around the fact that we've started to get more volatility back into the markets, which is feeding off the fact that you've got a lot more uncertainty in many of the economies around in many of the key economies, I should say, in the world at the moment. This volatility is something we've not had for quite a while, and it's certainly something that is possibly appreciated by many people, considering the long, grinding markets we've had for months on end, and the frustration and the patience required to trade those markets. Questions about a double-dip recession certainly are on the horizon, and it waits to be seen what actually will happen going forward. That's it for now. As usual, if you have any feedback, it's media@capitalspreads.com.